Hello, folks. I am what's keeping you from lunch or line dancing, if that's what you do too. Either way, let's run through this. I'll be speaking about the best ways to automate and simplify the trust accounting process from start to finish using Clio. All right, a little bit about me. My name is Adrian. I am the Group Product Manager for Financial Performance. What that means is that my team handles everything billing, payments, and accounting, which I know many of you folks have much feedback on. And if you do have feedback on, we are right around the corner right there, so do come stop by. I've been at the company for about 2 years now, and like I said, my team focuses on the fintech and money movement side of the business. And unlike most Cleons you'll meet today, I'm actually not from Vancouver. I grew up there, found it a little bit boring, made my way out to Toronto, but don't tell any of the other Vancouver Cleons that. Now, we're going to get to a little bit of audience participation here today. I'm going to skip the Nashville question, because I know you've been asked that before. Instead, let's do something a little more relevant. How many folks here actually use a trust account today? All right, most folks. Okay, awesome. Hopefully then, this is a bit of a refresher on trust accounting in general, and maybe some specifics in Clio in terms of how we can help you out. Okay, so today we'll go through some trust fund basics, what the trust account requirements are, how to get money in and out of your trust account using Clio, what not to do with trust funds, and then lastly, a summary of everything I've talked about if you've paid attention to nothing. Okay, so show of hands here, who actually finds just trust compliance in general maybe a little bit daunting? It can be confusing at times. You get scared end of the month. A couple folks, most people here find trust accounting great. Okay, that's amazing. So hopefully for some folks that's more of a refresher. So trust funds, as most folks do know, are held in trust for a third party. Normally that third party is the client, but the funds may be owed to someone else. Think of a down payment on a house. It comes from the client, but it is owed to the house seller. Every bar association has specific rules when it comes to trust accounting. I'll be going over some of the more generic ones. First and foremost, trust accounting, or trust compliance, is a fiduciary duty to the depositor. Trust funds may only be used for a specified purpose, with the client most often directing or agreeing to that purpose. Deposits are done with the client's understanding of how those funds may be used, such as to pay for future invoices. Secondly, trust funds are always separate from a firm's operating account. Thirdly, the bank account, where trust funds are placed, is with an IOLTA qualified bank within your state of practice. These accounts deposit any accumulated interest into the state-owned bank account, and these funds are used for legal aid protection or client protection services. And there's mandatory reporting on these trust accounts. Lastly, and I'll be saying this a lot, every penny is regularly reconciled. Why use trust requests in the first place? Well, trust requests protect both the lawyer and the client's interest. With Clio, we do most of the work for you. And we've seen firms see an increase in their realization rate and their collection rate. Now, to break those down a bit, the realization rate is a measure of efficiency and calculates how much billable work you actually put on your invoice minus your discounts. Your collection rate measures how much of that billed work you actually collect for. So if you use trust requests, we've seen an increase in both of those. In the 2017 LTR, family laws typically had a higher realization rate, so they billed more, but a lower collection rate compared to other practice areas. However, for family law clients that had associated trust accounts, their matters had a higher realization rate and much higher than those who didn't. We're talking about an 8% difference. Additionally, in that same study, we saw that for clients who had trust accounts, when it came to their collection rate, we saw a 15% increase. And when comparing trust accounts on matters to those without, the average collections per matter jumped from about $1,400 to about $2,800. That's about double. So, if we're talking about the importance of trust requests in general, you're looking at an 18% increase in your realization rate and a 50% increase in your collection rate. All right, so what are the requirements to actually use the trust account? So the regulatory requirements are that it has to be in a local bank within your state or depending on jurisdiction. Depending on the bank, it may be the obligation of the firm to explain what a trust account is, and a specific type account labeled trust with mandatory reporting duties. And when it comes to tracking, like I said once before, every penny's got to be regularly reconciled. Now, how does Clio help you with that? There are free drinks somewhere. I did not hear what that was. Somewhere that way. All right, so how does Clio help you with that? Not with the free drinks, I mean we do have free drinks, but with trust accounting. So with Clio, you can set up protected trust accounts. We have trust reconciliation, which I'll go through today. It's in early access right now. If you're more curious about a demo, come by the booth and I'll give you a demo of it as well. And we have a number of reports, such as the client ledger report, the Clio payments report, and the trust reconciliation report. Also, over in the account section of Clio Manage, you can specify any number of trust accounts that you want to use. And when sending a trust request to a client, you can decide which of those trust accounts you want the funds to be deposited into. And if you have Clio payments enabled, Clio ensures that the trust account is protected. Any fees are always pulled out of your operating account, and the full amount is always deposited into your trust account. Who here uses QBO or Xero to do reconciliation and they're auditing today? Most folks, some people. Okay. So trust reconciliation, which is an early access feature that we just released, is meant to help facilitate that process and make it easier for you. Trust reconciliation is one of our latest enhancements, and it allows you to match records between your trust ledgers and your trust banking records for that full three-way reconciliation match. You can get started with trust reconciliation by coming over to the accounting and reporting section where myself and my colleagues will be, and we can sign you up for early access. If you don't want to use early access, you can wait until we launch and do a full release later this year. But over in the account section of Clio Manage, you can select which of the trust accounts you want to begin the reconciliation process with. Now, related to that, we also have the trust ledger report. It's probably the one you'll probably use the most often. Clio has the ability to generate the trust account and the client for the time period and the jurisdiction for the time period that your jurisdiction requires. All right, so how to get money in and out of the trust account? So for depositing trust funds, you want to record any manual deposits, your cash or check. You want to use trust requests with Clio payments to automate the trust deposits and records. You want to use payment plans to automate the collection of those trust requests. You can use things like secure payment links to allow clients to deposit funds directly into your trust account via payment link that you may send them. All right, how many folks that use online payments today? Doesn't have to be Clio payments, it can be anything. Okay, a good portion of you. So we know that about 65% of clients prefer to be paying online, and about 72% of clients prefer to pay their bills using payment plans. Both of these Clio facilitates. And when it comes to secure payment links, you can take online payments into your trust account. You can copy this payment link, you can send it to them via email, you can put it on your website, or you can charge them by simply clicking the charge payment option. If you want to know more about Clio payments, definitely drop on by to the product lab again, where my team will be speaking about all the new enhancements we released on Clio payments in the last year. Related to payment plans, not only do payment plans sort of help your client out, but they also help you. You can use payment plans to automate your payment collection process for trust, resulting in automatic payments every week, every other week, or every month. And if you have Clio payments enabled, you can set up a payment plan with credit card or ACH, also known as e-check. And all fees, like I mentioned, are taken out of the operating account, protecting your trust account. If you're still unsure about trust requests or online payments, just know that 57% of bills and trust requests shared with an online payment method are paid within the first 24 hours. That means a firm can gain peace of mind when funds will be available and reduces some of the manual work when it comes to recording checks or in-person payments. All right, so you have funds in. How do you get funds out of your account? So you can do things like applying an advanced fee deposit that are in trust to pay outstanding invoices. You can use our QuickBooks integration to print check disbursements. And I'm going to clarify here for anyone who has a checks for both their operating and their trust account, We recommend that they are very visibly different. We have heard many mistakes where folks accidentally pull out of their trust account when they didn't mean to because their checks look very similar. Related, you want to make sure there are correct permissions related to your trust account, just in case anyone else writes a check for your trust. You want to make sure that only the responsible attorney is allowed to withdraw funds from the trust account. We're also coming out and releasing soon the Clio Payments Refund Trust feature, which I know many folks are interested in. And if you are more interested in that, drop by the product lab where my team can talk you through what we're thinking about. I'm going to call out here as well, one of the things that you cannot do is withdraw cash. If you have a debit card linked to your trust account, Clio's recommendation is to cut them up. Within the Matter on Clio, you can actually go and disperse trust funds directly from there. And then you can document exactly how those funds were dispersed. So the details of the check. Over on the billing section of Clio Manage, you can use the approve and apply trust funds for your revenue bills. Oh. All right. So you know to get funds in, you know to get funds out, but you got to do the monitoring. So when it comes to monitoring your trust, you want to document every recipient, method, matter, and client. You want to use Clio Payments notifications for your deposits. You want to automate notifications for your evergreen retainers. So evergreen retainers allow you to set up a minimum threshold within your account. If that threshold is met, the responsible attorney is notified and they can send out a trust request to top up those funds. And within Clio, directly on the Matter, you can track all your trust funds. Okay, what not to do with trust funds. You cannot edit, delete payments on completed trust requests. And if you have Clio Payments enabled, we make sure that these are protected. If a client comes back to you and disputes a payment, the lawyer needs to leave the disputed funds in trust until the account is resolved. If you have Clio Payments enabled, we make sure those funds are actually taken from your operating account to protect that trust account. You cannot swap trust funds between clients. And you have to make sure your clients have informed consent. And that means that they've been given adequate information and they'll be able to get advice. So you should be able to tell your clients what their balance is. And if you have Clio enabled, actually at the bottom of the bill when you're sending out a trust request, you can actually add the statement of balance, which tells your client what their trust balance is at. And you can use things like the bulk apply trust feature to apply trust in bulk to all your clients as well. And lastly, when it comes to the beginning and end state balance of your trust account. So the beginning and end state of your trust account over its lifespan should start at 0 and end at 0, but it should never at a point in time go into the negative. As well, you shouldn't be accepting trust funds into another location, another account, such as your operating account. And if you are mixing invoices and trust requests when sending out a bill to your client, the best practice is those funds go directly into your trust account because you can pull the invoice payment out later. And lastly, and this should be obvious, hopefully, you cannot use trust funds for personal gain. Okay, I spoke a lot. If you paid attention, I'm very happy. If you didn't, here's a summary of everything we talked about. So first and foremost, using trust requests in Clio results in improved financial performance. The LTR tells us that trust requests see an 18% increase in your realization rate and a 15% increase in your collection rate. Clio makes it easy for you to stay compliant. Trust reconciliation, which we're in early access right now, allows you to reconcile funds directly in Manage, and trust reporting keeps track of every penny coming in and coming out of your trust account. Clio makes it easy for you to take money securely in and out of your trust account. Clio Payments makes it easier to collect online trust funds. And trust disbursements allows you to help maintain your trust balance to start and end at 0. All right, thank you. If you have any questions, drop by the product lab. And if you're curious about any other talks, there are 2 other talks today about trust payments and new features. One is automating collections with Clio features, and implementing Clio's newest features happening in about 45 minutes, where me and other PMs will be going through a bunch of releases we talked through this year, so not just accounting related. Thanks, folks.